Have you ever noticed that some people love risk? Investing in high-wire ventures that pay off big. While others are after something low risk, perhaps a smaller reward too, but predictable. Something that runs like clockwork, you might say. Which brings me to the bonds. In the highly complex and interconnected financial world, bonds play a crucial role. They're part of what makes the global economy tick. The best way to think about bonds is they're actually a kind of loan, money lent by people like you and me so someone else can spend it or invest it. When that someone is the government, the money they borrow can fund all sorts of things, from schools and hospitals to space travel and new technologies. Hopefully, investments that will help the economy grow and create more jobs and greater tax revenue. So, what's in it for me? In return, they promise to pay me back after a fixed period, but with interest. And there are a lot of bonds out there. If you add up all the bonds and everything else governments owe around the world, you get to a pretty big number. The IMF estimates $100 trillion. That's with a T. But the thing about bonds is that anyone can buy them. So let's try one out. I'm going to get a hypothetical 5-year government bond for $100. Let's start the clock. Every year that $100 is invested, it's earning interest, about 4% every year, right on time. Longer-term bonds of 10, 20, or 30 years often pay investors even more. So, while we wait, why are government bonds often seen as a safe investment? Well, because they're backed by the government's taxes, and so they're considered more likely to be paid on time. The trade-off is that they generally offer lower interest rates than bonds issued by corporations. Corporate bonds and investments often leave more room for risk, but offer bigger potential payouts too. 5 years later, I get back my investment with interest. Okay, not bad. If things go right, that is. Sometimes we get a wrench in the system. If the money is poorly spent or a country gets hit by a natural disaster, for instance, the government could then have trouble paying me back. But when the system is running well, public bonds can be a predictable win-win. Governments get money to build prosperity, and investors get paid back on time, with interest, a tidy sum for their patience. Time after time.